Right, good evening, everybody. It is Sunday, November the 20th, 2022, approximately 3:52 p.m. Eastern Standard Time. Don't want to make this video too long. I do want to touch on some key points. We'll do some top-down analysis and then kind of go from there. So first thing I wanted to discuss is fundamentals. So from a fundamental perspective, understanding our fundamentals and knowing what's going on gives us the why behind the what. So the what, for the most part, is that the market is moving. The market could be moving in one direction or another. Either it's bullish or it's bearish. It could depend on the time frame and things like that. But knowing why the market is moving in one way or another is very important. So that's your fundamental analysis. So for this week, the most significant news, most significant fundamental analysis is going to come from the FOMC, the minutes that the Fed publishes, or the information that comes out of the Fed meeting on Wednesday at 2 o'clock. So this Wednesday, November 23rd at 2 p.m. Eastern Standard Time is when we're going to get some significant news that will have potential repercussions on market movement. I'm not going to get into necessarily what the sentiment is because we really, there's hopefulness. There's a lot of individuals, institutions out there hoping that the Fed gives some type of signaling that they're going to slow down in some way, shape, or form on the rate hikes. But either way that goes, and we don't know right now which way the Fed is leaning, as we know from the past few iterations of Fed speak, information from the Fed. The sentiment and the hopes and everything could be one thing, but the Fed comes out and can indicate something else. So we don't want to speculate here because that's not what we do. Basically, what we do is we trade what we see. So with that said, that's your fundamental analysis. Again, keeping an eye out for the FOMC on Wednesday, November 23rd at 2 p.m. Eastern Standard Time. That will be significant news that will have an impact on the market movement. Until then, though, we got some things that we can take a look at from a technical perspective, and we're going to dive right into that. So first, we're going to go to our weekly chart for perspective here, give us an idea of how the market is trending overall. And as we can see, overall, since May, we've been in a pretty strong downtrend. But as of late, and we can see right here, around September sometime, we hit a pretty nice discount zone where price decided it was time to start making a move up on the Euro USD pair. But for the moment, so more currently though, we hit an area of resistance here. It looks like where now we're starting to get a rejection at this current level here for some potential movement to the downside for a little bit. And basically, this green box that we see here is what's going to possibly draw price to it during that down move. So what we're looking at here, so this green box is called a fair value gap, basically a area of price in the market in this particular pair, Euro USD, where there was a lot of there's imbalance, right? So basically for this one, we're looking at bullish imbalance, where there was a whole lot of buying as price was moving in a bullish direction, but not a lot of selling. So that creates an imbalance in the market, and typically these fair value gaps can act as a magnet to price, where basically what can potentially happen, and more than likely will happen, is that at some point price is going to come back and get into this area of this fair value gap and fill some of those orders and validate that price movement that previously took place. So that's what we're looking at right now. We're going to go to the lower time frames to kind of see how that can have the potential to play itself out in the next coming days or weeks. And like I said, again, it just looks like price is going to head towards this area in the fair value gap. As you can see, you see that little line right there. And if we put, get an idea to see what that price movement can be. So from where we are now, from current price to the middle area of the fair value gap is roughly a little bit over 200 pips. So we can look to possibly get 200 pip movement out of this move potentially coming. So let's go down to the lower time frames and take a look and do some analysis from there. So as we look at the daily, all right, so now we got an update. All right, so let's take a look. So right now what we're seeing on the daily, again, coming off that weekly area there, we can see that price is making its way in a bearish nature. So kind of a change in trend for the time being, or we got a rejection pullback or what have you at the moment is what we look like we have going on. So we have a couple of fair value gaps along this line that price has the potential to come and touch and grab some of that liquidity that's sitting there, again validating those big price movements that happen and caring for some of those imbalances. The idea is that we might come down and get most of these imbalances, feel a lot of these imbalances in the market right now. So one of the things that I wanted to point out in looking at why the market reversed at this area, and then we'll look at what the potential is for the move to the downside. So and trying to take a look and see why the market reversed at that area, we're going to put a fib extension on it to get that look. So we need 3 points of contact. So here's the first one, here's the second one, and here's our third one. And this is going to give us that fib extension, all right, to get an idea why price reversed. So those that are familiar with Fibonacci and how to utilize it, you got the fib retracement and then you got the fib extension. So with the fib extension, it gives us an idea of some reversal points with price in the market, right? So again, this is the daily chart, and in looking at the daily chart, we can see from the extension that price did make that reversal at the 161.80 area price range, which was right around the 1.04 price area. As price was moving up, there was a lot of talk and indication that price would get up to this 104 price range. And so it did, obviously. And now we're looking at that reversal from that area. So, we can see, kind of get an idea of why price reversed at that area for the most part. And again, just because it's the 161.80 isn't necessarily the why. But again, for traders that understand how the fib extension and retracements and things work, that 161.80 area is typically a reversal area for price movements. Reversal, pullback, whatever you want to call it. But price has a very, very good chance of having a pretty good reaction from those areas when it reaches it. So just something, if you didn't know, to put into your toolbox for future reference. Now, all right, let's take the extension tool off, and I want to show you all what the potential is that we have for this current retracement. Right, so we're going to put a fib retracement on it right now. Now for the retracement tool, we're going to go from the most previous swing low, right, to the current swing high to get that one. All right, there we go. Here. All right, we're going to mark that out a bit right here. All right, now as you can see, and look at how the price movement pretty much lines up for the most part with how the price lines up with the Fibonacci retracement tool that we put on here. So if you see these, you see where these fair value gaps are. You see where the Fibonacci tool is in relation to these fair value gaps. So So we'll see. So according to the Fibonacci retracement tool here, we have an area right here. Again, we'll look for price to come down, get into this fair value gap, grab some of that liquidity. It may have a bit of a reaction. I don't anticipate that price will have such a big reaction after getting some of that liquidity out of the fair value area to where it'll create a new higher high at the moment. So the anticipation is, or the expectation is, that price is going to grab some liquidity. It may make a bit of a retracement before continuing down, and then we'll look for price to grab some liquidity right here. But what we're really looking for is for price to come down in this area, right? This golden area right here. And as you can see, we got that line. That's that line that we were looking at on the weekly time frame, right? That within the fair value gap. So on the weekly, we put all three of these fair value gaps together, and that line set pretty much right in the middle. And basically what that means is this is an area where price has potential to come, and you see where it kind of came before and retrace back for the continuation, right? So price has potential to come back down into this area. As we see, this is the 61.80. Anywhere between this area right here and this area right here, price definitely has the potential to come, touch, and grab some liquidity. Even as far as right here, as we see this fair value gap right here as well. So if we happen to see a deeper retracement, right, of price movement beyond the 61.8 area, we can look for price to come down to this area. And if it does get here, this is a pretty deep retracement. At that point, price will have enough liquidity, from grabbing all the liquidity in these fair value gaps, for price now to move into a continued uptrend and create a new higher high. So that's the idea behind what we could potentially see price do in the next coming days or weeks, depending on how long it takes. Price could be propelled by news, depending on what the news is. News can propel it to, grab this liquidity a lot quicker, sooner than later. Or we can, again, just depending on what the news is, we can have some pullback, to the upside before we come back down and grab that liquidity. But the idea is that we have quite a bit of buying liquidity, sitting in these areas, and we can fill that liquidity with price moving down and some sell orders, grabbing that liquidity, and then the market grabbing enough liquidity on this this pullback move, right? For it to now propel into the bullish direction to create a higher high. That's basically what we're looking at right there. And so let's go down and see what that looks like on the 4-hour. We're going to let the chart reset itself so you all can see those levels that's already plotted out on the chart here. So this is the 4-hour chart. As we can see, things line up quite a bit when you look at it from this perspective, for sure. And you see right here, again, that little line right there, has got my attention for sure. We all, those that are familiar, again, with the Fibonacci retracement, and how that works, you definitely want to see that pull back to this 61% area, right? These are your deeper pullbacks that help to create that propellant that pushes the market even further into its direction, right? So, we'll look for price to come down in this area for sure and grab some of that liquidity. So that's definitely what we're looking for as price comes down again. And then again, coming down some more, we'll let it update, get an idea on the hour chart. But these are just some ideas, for everyone to kind of see and, put together with your own personal analysis and understand where the potential is for price movements, some potential trade setups, that you can take as price moves. Again, you can do your own analysis and see, what you come up with. I just wanted to give you something, to kind of take a look at, and maybe do some comparisons and stuff. See if what I'm showing here lines up with what you're seeing. What perspective do you have? This is just my perspective. Definitely, I encourage you to take a look and get your own perspective, utilizing some of the tools that you're familiar with. But of course, this is my own personal perspective and what I'm looking and tracking for the next coming days and week or so, just depending on what the market looks like. So I'll be looking to take entries at various price levels as price comes down to grab some liquidity. Again, I won't make a move until price makes a move, when I start seeing what I'm looking for. So the very first trade setup that I'm looking for price to break this area right here, right? So once price gives me a break of this area right here, then I'll look for some shorts. I'll look to put in some short trades, some sell trades to catch some pips coming down. And then just depending on how strong it is, how strong the moves are, will kind of determine how far I look to take those trades. I would like to have one or two trades that I can hold long enough to come down here and grab some of this liquidity out of this area right here. This area right here just has my eye, or what have you. So I'm definitely looking to get down in this area and grab quite a few pips out of that area. But again, I'm not looking to be short on it until we break this area right here. Once we get a break of this area right here, again, then I'll look at the setups and indications that give me confidence in getting into some sell trades to start riding this market on down, as prices starting to indicate at the moment. All right, one last thing that I'll do before I close this video out is I want to take a look at volume. Volume is very important to my personal trading process, and so if you have questions about how I have my volume set up, by all means feel free to put it in the chat. Let me know what you think, about what you see on my charts and stuff like that. If you have questions, feel free, and I'll look to respond and answer some of your questions if you so have some. So looking at this right here, so this, what you see right here, again, Euro USD, this is the 15-minute chart, and this is the visible range volume profile. I just wanted to show this to you all, just to again, give you some tools that I utilize to analyze the market. So this is the 15-minute chart, and as you can see, the point of control right here, and we have quite a bit of volume sitting right there, right? Sitting right there at this area. So price did a big movement away from the point of control, and we'll look for price to come back to it at some point. What I like to see is for price to come back to it, and then that gives me a good confident area to put my sell order in. That's kind of what I'm looking at, and let's look at it from a higher time frame. Let's see what that looks like. Okay, we're going to adjust it a little bit. I want to push it back. I want to push this back quite a bit, so because it's the 4-hour time frame. Our days, give us a couple days. We'll get a couple days back. All right, let's see what this looks like. Yep, we can see, as you can see right here, as kind of indicated on the other charts, right? We have price right up here. Obviously, there's a lot of volume in this area. And again, this is the 4-hour, right? So most of the volume is sitting right here in this area. So there's a lot of opportunity for price to come down in these areas here. As you can kind of see when we talk about those liquidity those fair value gaps and stuff. So we look in this area right here. we can see, look at some of the imbalance that's sitting there. So you got roughly, yep, we got imbalances along this line. So right here, this is a pretty big imbalance right here. You got another big one right here, 127K buy orders opposed to 86K sell orders. Again, but all along this area here, there's quite a bit of imbalance. 239K buy orders opposed to 194K sell orders sitting right there. So again, as this market pushed up, it created some imbalances. Which gave us those fair value gaps. Again, these are things that I do to analyze the market, to give me some confluence and validation of what I'm seeing. It's not just one thing. It's not just one tool. I like to kind of put some things together to lend validity to what I'm seeing or what have you. So I feel pretty confident in, the market coming down, grabbing some liquidity off of some of those imbalances and things that we're seeing in the market. So again, this is pretty much where I wanted to end this video. I think I have explained everything that I wanted to explain from this perspective. I look forward to maybe later in the week giving you all some more tips and stuff based off of what we're seeing during the trading week as trading is actually taking place. That communication and transactions back and forth throughout the week. Again, I like to, one of the sayings that I like in trading is trade what you see and not what you think, right? We all have hopes and dreams, right? We hope price does one thing, but the best way that I have found to be consistent in these markets is basically to trade what you see and not necessarily what you think, right? Have a plan, first and foremost, and when price, starts to react in different ways according to your plan, then you can execute, right? It all starts with a good plan. So you have to take the time to come up with a good trading plan for the week, for the day, whatever the case may be, based off of your personal schedule, right? That would definitely, give you, not necessarily a leg up, but, a leg up on most, because most don't take the time to plan. So it could put you in a better place than a lot of the traders out there. So with that being said, that is my time for today. Good luck to everybody. Again, if you have any questions, feel free to put some comments and stuff in the chat when this video is posted, and I'll do my best to get back to you. Good luck to everyone, and great trading. Thank you.